Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 3 strong buy stocks that have billionaire hedge fund managers spending millions. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we found 3 stocks that have had a big increase in hedge fund activity, plus come in with a strong buy consensus from Wall Street. So today we're going to take a look at what these companies do, who's been buying up shares lately, and of course what those Wall Street analysts are predicting for the stock's future. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. If you want to follow along with these stocks, you can do so right on the Tip Ranks website or over on the Tip Ranks mobile app, which you can download using the links down below. Now let's jump right into these 3 stocks. First up is a company called SLM. They trade under the ticker SLM, currently priced above $33 per share. We have chatted about this one back around February, March, I believe. In the past year, the stock has gained 45%, and in the last 3 months has climbed 25%. They do currently score a 10 out of 10 on the TipRanks Smart Score. You might be more familiar with SLM by their operating name, Sallie Mae. They are a finance services company specializing in educational loans. Sallie Mae focuses on supporting access to higher education while holding over $20 billion in private education loans. Their primary business involves originating, servicing, and collecting these loans for students and their families to cover college and university costs. They also offer banking products such as high-yield savings accounts and certificates of deposit to help families save for education. SLM saw a big increase in hedge fund activity last quarter, with overall hedge fund holdings increasing by 5.9 million shares. That included one big brand new position of $277 million, plus a big increase here of $34 million as well. Their latest quarterly report came out near the end of April, where they saw both an earnings and revenue beat. Q1 earnings per share of $1.19 came in 21 cents ahead of expectations, while revenue of $375 million beat by $14.5 million. The company also saw an increase of 7% year over year to their loans outstanding, coming in at $22.9 billion. Just today, we heard from an analyst at RBC Capital who increased their price target on the SLM stock. They said they expect fundamentals to be driven by healthy through modest consumer activity, seasonally higher loan balances, and improving credit metrics. The monthly data continues to show improving year-over-year delinquencies and charge-off metrics, which, alongside healthy qualitative reserves and a less volatile macro, should support mostly stable allowance levels. And with 8 current analyst ratings, the stock does come in as a strong buy, with 7 buys and 1 hold. The average price target is just shy of $37 per share, implying an upside potential of over 10%. Looking at those price targets down below, they do range from a couple older buy ratings with a slight downside of 4% to $40 with an upside of nearly 20%. Our second stock that hedge funds have been buying up is Acadia Healthcare. They trade under the ticker ACHC, currently priced at $24 per share. Their stock has been struggling this past year, falling from highs back in August. They've dropped 62% in the past year, down slightly in the last few months. Acadia Healthcare is the largest standalone behavioral health company in the United States. They specialize in providing psychiatric and chemical dependency services through various settings, including inpatient psychiatric hospitals, specialty treatment facilities, residential treatment centers, outpatient clinics, and therapeutic school-based programs. They have over 262 locations across 39 states with over 11,800 beds and 25,000 plus employees. As you saw on the stock chart, Acadia has had a tough year. In 2024, they faced a couple different lawsuits, and for their Q4 in 2025, they had some disappointing results. But it seems that hedge funds are buying up that dip. As you can see, a big increase in hedge fund activity in the past quarter, with it increasing by 5.7 million shares. That includes quite a few brand new positions started up by hedge funds and a couple big purchases to existing ones. And for their Q1 earnings report at the start of May, they did come out with both an earnings and revenue beat. Q1 earnings per share of 40 cents beat estimates by 4 cents per share, and revenue came in at $770.5 million, just above the midpoint range and beating expectations. The company added 378 new beds in the first quarter and saw their same facility patient days grow 2.2%. Following that earnings report, we did have several analysts weighing in, many of them reiterating buy ratings, but slightly lowering their price targets, such as one from KeyBank, who noted the Q1 results were solid and that their adjusted EBITDA appears to be stabilized post second half of 2024 challenges. They think their Q1 results put the company in a good position to hit the required second half of the year ramp. With 12 current analyst ratings, Acadia comes in as a strong buy with 9 buys and 3 holds. The average price target is $42 per share, implying an upside potential of 75% from current prices. Looking at those recent ratings down below, they range from a pretty flat upside of 1.7% all the way up to 128%. If you've made it all the way to our third stock today, then this is a reminder to make sure you've hit that thumbs up button. Last but not least, we're looking at Clearwater Analytics. They trade under the ticker CWAN, currently priced above $22 per share. They're up over 14% overall in the past year, but have declined recently, down over 6.5% in the last 3 months. Clearwater Analytics is a software-as-a-service fintech company specializing in automated investment portfolio accounting, reporting, reconciliation, performance measurement, monitoring, and risk management services. They primarily serve institutional investors, asset managers, corporations, and insurers, managing trillions in assets for over 1,000 clients worldwide. And as you know, this is another stock that hedge funds have been buying up recently, with hedge funds increasing their holdings by 4.5 million shares last quarter. That included one brand new position of over $100 million and several others increasing existing positions. Their latest earnings report came out near the end of April, and we have yet another earnings and revenue beat. While net revenue retention decreased slightly, the company did see their revenue grow over 23% to $126.9 million. Their annualized recurring revenue reached $493.9 million, up over 22% from the prior year. Just a few weeks ago, near the end of June, we did have a 5-star analyst from Piper Sandler initiate coverage on the stock with a buy. They noted that Clearwater is in the midst of integrating 3 key acquisitions that will significantly expand its total addressable market and create a full end-to-end platform for its clients. They believe the integrated platform will provide upsell and cross-sell opportunities that will expand wallet share among existing customers and drive higher win rates. Clearwater has 11 current analyst ratings, coming in as a strong buy with 9 buys and 2 holds. And the average price target of $31.80 implies an upside potential of 43.5%. Looking at those price targets down below, the recent ones range from 17% upside all the way to a few at 62.5% upside. So that is a quick look at 3 stocks that hedge funds have been buying millions of dollars worth, and which all come in with a strong buy consensus from Wall Street. Let me know your thoughts on these 3 companies, if any of them were on your radar before, and which catches your eye the most. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please always do your own research and due diligence. Thanks so much for watching. Have a great day. I'll see you back here next time.